If you look at today compared to yesterday, we had a positive start yesterday. We fell into the red, but really coming back yesterday afternoon following Wall Street's opening, and that seems to have continued through to today's session, Rob.
Yes, I think positive statements coming out of America. The employment is looking a little bit better, and the Fed, one of the Fed Reserve Bank guys mentioned that they think that America is on the road to recovery and looking relatively good. And so generally all earnings are good, balance sheets are good in the States, so that's leading on to South Africa and world markets in general looking really positive at the moment.
And there seems to be a feeling out there, just with the risks of the rising oil price and the potential for it to rise even further, that this is really going to put any withdrawal of stimulus on hold for this point, which should be good for equity, shouldn't it?
It should be. I mean, I think that the oil price has tapered down slightly. And I think the inflationary pressures from the oil price moving up are not too bad at the moment. If Libya settles down, it should come back down to $95 or even $90. So I think that equities are looking relatively good at the moment and showing a bit of value in some of the stocks.
And somebody that lots of investors look to for direction, Warren Buffett, the billionaire investor, yesterday saying he's looking at making big investments this year. So clearly finding value in the markets over in the United States, and perhaps giving other investors some food for thought there.
Well, I think that with the inflationary pressure from oil, even if at $90, what's happened is that American interest rates are going to stay flat. With those rates staying flat, you know, the companies are building up very good balance sheets. Warren Buffett's companies are sitting on a lot of cash, and it looks like they're going to start investing now, which is very positive for the markets.
Looking at our own markets, we had a bit of a pullback last week, and generally emerging markets have seen withdrawals of foreign equity. Do you think we're starting to see those flows return to emerging markets like South Africa?
I definitely think so. I think that with interest rates again staying flat 0 to 0.25 in the States, people are still looking for yield. And until we see massive inflationary pressure and an increase in interest rates across the water, we're going to still see people looking for that yield, looking for the carry trade. And South Africa looking really good, especially after the budget. Deficit slightly less than before, and it look like we're going to be upgraded slightly. So people looking for emerging markets, and South Africa looking really good. So I think a flow of funds can definitely come back into the South African market. And we can see the rand maybe down at 690, 686.
So do you think this is one of the reasons we have seen the rand firming up so nicely over the past few sessions?
I think it's part of it. I think the dollar is at a 4-month low as well against a basket of currencies, so that dollar index is quite weak at the moment. And so I think it's a little bit of both there, Stephen.
How about gold? How's gold been behaving throughout all this? I see it's still holding above that $1,400 an ounce mark, but it's really not getting any momentum to the upside.
Well, I think people are looking for it as a store of wealth, and they're moving away from the dollar, and therefore money keeps flowing into gold. I think on a production level and a supply level, you know, there's enough supply in the world of gold, and people you know, people are using it as a store of currency. So I think that there's nothing much more that can push gold up beyond 1450 at the moment. It's all-time high, I think 1450. But anywhere above 1400, really good levels for gold. The gold miners are making really good money at these levels. And on the local front, our gold miners are starting to, on technical levels, start to break out of a 4-year down trend line. So looking really positive for our miners. And anywhere above 1400, you know, our miners are looking really good for the first time in a long time.
Well, moving from our miners to our manufacturers, we had PMI numbers out here this morning, ticking up a little bit, but still holding quite positive at just below that 55 level. We also had PMI data out of China this morning, pulling back only slightly. And of course, ISM out of the United States this afternoon. How's the market going to be viewing all of this manufacturing data?
Well, I think a little bit of inflationary pressure in China still, and maybe a bit of tightening coming through there. Their PMI actually came down slightly. Just showing you that some of that tightening is taking effect. But if you take a look, some other PMI data that came out, Germany came out improved, the PMI came out better, Italy improved, UK has improved as well. So but it looks like the manufacturing is starting to move in Europe as well. So even if China slows down slightly, that European economy is starting to get going now, which is very positive, especially for South Africa as its biggest trading partner.
Rob, numbers out of Meterex this morning, earnings up 152%, so benefiting from that rise in commodity prices and also a rise in production.
Yes, they got the production up another 6% in copper, which is quite good. I think some people might have been looking for a little bit more increase in their production, but the copper price, I think, hitting $8,000 at one stage, so very supportive copper price. I think that China did a lot of buying earlier in the year and late last year, so looking very positive for metrics. They've cleaned up a lot of their mines in Zambia and got their cost structures under control and their securitization of their debt as well. So looking much more solid now, and I think they're fully priced at around R5.60. If we see increased growth in China over the next month or two, then maybe you can see a little bit further than 5.60, maybe R6.60 or even up to R7. But we would need another push from China and Europe to get the copper price moving again.
We are looking for numbers from Steinhoff International in just a short while, and this is a company that's going through a massive transformation. It's about to buy Conforama, the French furniture retailer, which will make Steinhoff the second biggest furniture retailer globally after IKEA. What are you looking for here? This is a share price that has run quite hard already, so would you put it in the same basket as some of the other retailers and say probably fully priced at these levels?
I think it is fully priced. You see, if you took a look at Bidvest's numbers, they got hit quite hard by a strong rand. I think Steinhoff will also be numbers will be a bit tainted by a very strong rand over the last year, so that might taper their earnings. I think that it's a very big purchase that they're doing of the French retailer, and I think that's very positive for them. But I think that at these current levels, they're fully priced. I think you have to take a look at if that transaction goes through, how the cost-cutting components of that deal, and can they increase their profit margin after that deal. So you have to look in a few months' time again. For now, I'd say probably fully priced.